Hi, Peter Jones, author, property investor and ex-chartered surveyor. And I've had a great question in, which is, what are the risks of owning a buy-to-let property? And I think it is a good question because I meet many would-be and new investors who, to be honest, and I mean this in a respectful way, but I think that they can be a little bit naive about property investing and the consequences of owning properties and the potential problems which they could have down the line once they've bought a property. So let's have a very quick think about some of the potential pitfalls of owning buy-to-let property. Well, the first one, which I think may surprise you, is government interference and politics. And we've been seeing quite a lot of that in the last decade or so, those of us who've been investing for a number of years. So there are some buy-to-let investors who seem to be sort of quite hysterical and paranoid about it, who are calling it a deliberate government attack on the private rental sector. Now, maybe it is. I mean, I'm not connected to government, so I can't tell you whether it is as deliberate as that. But certainly we're seeing policies and have seen policies coming through which have made doing property investing, doing buy-to-let, much more difficult. Probably the one which most people know about is Section 24, which has taken away an investor's ability to be able to offset mortgage interest against the rent when calculating income tax. And it's because of that that many investors are now buying into a limited company, because at the time of recording this video, you still can offset the mortgage interest against rent when calculating corporation tax within a limited company. But many landlords threw their hands up in horror when Section 24 came in and when the ability to offset mortgage interest was phased out, and many sold up and got out of the private rental market. Whether the government really intended that to happen or not, we don't know. Many people think that it was totally intentional. And there's been other red tape as well, which has been introduced, which has made life difficult for investors and landlords, which I won't go into now, but you can research it if you go online. There's lots of people talking about it. So what other pitfalls are there in being a buy-to-let investor or investing in property? Well, probably one of the biggest ones is maintenance issues. I think that many investors can perhaps be a little bit naive about how much it costs to actually run an investment property. Now, when you buy your property, you're probably going to do some kind of a refurb. Because of the strategy and the model I follow, will always look for a property which is in rundown condition, and then I'll refurbish it. And if the refurb has been done properly, then hopefully that will defer and push down the line any repairs that need doing. So after the refurb, I'd expect a few years of sort of maintenance free. But it doesn't always work that way. So for example, you could do a really good refurb, everything could be looking like it's working fine, and then suddenly the boiler could go. Now, it could be that at the time when you're doing the refurb, the boiler was fine and you've had the gas engineer in, they signed it off, but then just something happens, and this can happen. If it's your first property and you have to spend £1,500 to £2,000 on a new boiler, then that could be your rental profit on one property wiped out for a whole year. So the pitfalls which I think we need to be aware of is that things can happen. Hopefully things won't happen. We hope that things won't happen, but we have to plan just in case they do. One of the best ways of actually self-insuring against something like that, I think, is once you start buying properties, make sure that you keep on buying. Buying one property, you become quite vulnerable, because if you have to replace the boiler and you spend £2,000 and you've lost your rental profit for the year, then that's it. But if you own 10 properties and you have to replace one boiler, then you've got 9 other properties which are still producing cash flow. So there's a sort of a self-reinsurance in growing a larger portfolio as quickly as you can. Once you start, I would suggest that you get on with it. What else is there? Well, there are market issues, and there are things beyond our control. We can obviously watch the times that we're in and make sure that we're up to date with what we think is going to be happening in the economy and in the property market. But the economy and the market is cyclical under normal circumstances. And so we should always be expecting that there'll be booms and busts, and we need to be aware of how we're actually going to cope with both, to be honest. Are we looking to sell in the boom? Are we going to look to buy in the bust? If we've bought in a previous bust and then gone through a boom and we still hold those properties in the next bust, how do we make sure that we survive that bust? Is there enough cash flow? And these are the things that we need to be thinking about. But many investors, I think, come charging into the market when they can see that the market is increasing. And that's not necessarily the best time to buy. You certainly don't want to be finding yourself buying near the top, only to see the values crash right down which can happen. In an extreme case, that can happen. We saw that in 2007, 2008. We saw it in the 1990s when prices fell quite rapidly. So we need to be aware of this, and we need to come into property investing with our eyes open and aware that these things can happen. So what else is there that we need to be aware of, and which could be a risk in buy-to-let? Well, probably the biggest one, and perhaps the one which you thought I might lead off with, but it's the one which most people think of. The others are just as important though, I think, but the biggest one for most people is going to be tenant problems. What if the tenant doesn't pay the rent? What if the tenant trashes the property? And of course, these things can happen. One thing which I've learned over the last 25 years of investing for myself is that if you own enough properties for long enough, then bad things will happen. I often say that property is a people business, and so as we're letting properties to people, that puts us in a fairly vulnerable position, because most people are nice and most people are honest. But there's a small minority, a very small minority of people who are not that nice and they're not that honest. And very occasionally, despite your best efforts of vetting and despite the best efforts of your letting agents and your managing agents, it's inevitable that if you're in property investing for long enough, you're going to have a bad tenant. It is just a cost of doing business. It is just one of those things that happens. But sometimes I see on Facebook people who are beside themselves with grief because they've let a property to a tenant who turns out to be not such a good tenant, and their whole world falls apart. Now, I think, again, it comes down to the reinsuring aspect. If you're going to be in property, you want to have enough properties so that if you do have a problem in one, the others will cover the problem. But also, it is just part of doing business. So you need to take a deep breath. You need to get in touch with your solicitor or your managing agent or whoever it is who's going to organise dealing with the tenant, and just make sure that the tenant is dealt with in an appropriate, legal and ethical way, and that the problem is resolved. These things will happen though. So my final word on this is, I think buy-to-let and property investing is great. Well, I've been in property for over 40 years and I've been investing for myself for 25 years. But I know that there can be pitfalls, and I've learned over the years that there's no point in having sleepless nights over it. But if you are of a sensitive disposition, and if you expect everything to be perfect and for everything to run smoothly forever, then property probably isn't for you. But I don't think there are many people who are really that sensitive or that naive. So as long as you understand that these things can happen and you're just prepared, you obviously hope that they won't happen, but you prepare yourself for the fact that they could happen, then you will be fine and you will enjoy property investing, because there are a lot of benefits to buy-to-let as well, which I'll cover in a different video. And if you come over to my website, www.thepropertyteacher.co.uk, and click on Learning with Peter, you'll find loads of great resources, including my best-selling home study course, The Successful Property Investor's Strategy Workshop, in which I'll take you through how I started my property business with literally none of my own money and bought £2 million worth of property in just 4 years and replaced my day job with passive income from the portfolio. It took me 4 years of trial and error to learn the best way to do this, but because I'm going to show you everything I did right so that you can copy it, and everything I did wrong so that you can avoid it, I'm sure you can achieve far more than me and far more quickly. So please visit my website for full details of this and all of my other resources. And until next time, here's to successful property investing.